free wait. All the stock markets, I think it was March 10th, took off together. Then, of course, March of 2009, when we put in what I call the Mark Faber bottom, because he was on CNBC and they were like giving him shit, you know, oh, doom, and the low he was on in March. I'll never forget it. And he said, I don't know why you guys call me good. He said, I'm getting long now. And the markets all coordinated again in March of 2009. You can run those and do some history and take a look at them.
There it is right there.
I mean, I'm telling you, the DAX everything went in sync, both of those periods. Is this one going to be the next time? Because they're all in, not only, we know that they're in monetary stimulus and as in the Fed speak, the zero lower bound or beyond, but they're all going for fiscal stimulus. So will they all ignite at the same time this time? I don't know. I'm asking because I don't know, but I've seen this before.
Okay. Well, then that's what we got to keep an eye on to see if they all just go at the same time.
Yeah.
Because you can see the bottoms.
Ira, in the absence of stimulus, I mean, I'm bearish DAX, I'm bearish France, I'm bearish Spain.
Right.
You know, in the absence of stimulus.
Right, but if the U.S. goes, you know, we know Europe already. That's why I got to go find the Wiedemann comments. I haven't read them myself today.
You know, Japan, you know, for a whole bunch of different reasons, is in a different place.
Oh, listen, you know, I was actually trying to buy the Nikkei, made a little money, then I got hurt in the onslaught of when the S&P, because they went together that night. But when Suga came in, listening to what his program was going to be, especially with the consolidation of banks, you know, I actually bought I bought Mitsubishi, what used to be Mitsubishi Tokyo, which I said, I'm committing a cardinal sin because it's just such dead money. But the yield's high enough. I see it, because if that were to take place, then of course the Nikkei was down pretty good and the yen, I think on Monday was down because there was talk that none of that was going to take place. But the Nikkei, as you can see, really hasn't been down that much. It went with the S&Ps, but it was struggling because it looked like Suga was going to change course, although he's been talking about consolidating the banks. The tip-off of a Japanese bank consolidation would be huge because, again, Japan has been overbanked. It would show that there's the one thing Abe was never successful doing was the corporate restructuring, which was badly needed. You know, guys like Daniel Loeb and a few other large U.S. hedge funds and private equity people, you know, made some big investments in Japan over the last few years, thinking that they were going to have a bigger say in corporate governance. It hasn't borne out. But they say that Suga is much more concerned about it. So if you got that, Angelo, you'll get, there's enough stimulus in the system, I believe, especially because I don't think you're going to see a consumption tax for quite a while. I'll have to talk to Toby about this.
Yeah.
Usually every time they've tried to get out of stall speed, then they put on they raise the consumption tax and everything goes into reverse. So
yeah, exactly. Now,
something to watch.
I agree with everything you said with respect to, you know, the banks, right? Mm-hmm. And I think what you said, you know, certainly could be a short-term catalyst. But my mind takes me back to what are the things that put the banks in the condition that they're in the first place, right? Number one. Yeah. And then number two, is there anything that underlines that's improving, right? Yeah. So that they can stop doing the things that got the banks into this condition in the first place. And that's the part where, you know, I'm like, I don't really see it other than an uptick in the global economy. because Japan is a world-class manufacturer.
Yes, no question. But their corporates are also sitting on mega amounts of cash.
All right, I mean, they certainly could put that money to work, in R&D and CapEx and all of that. But, why do you suppose they're sitting on all of that cash?
There's nothing to do.
Bingo.
So, well, the only thing that they can do, and that's why the yen really does not rally here. And actually, I tried to get Faber to talk more about the yen, but we got waylaid on some other things. He's really wonderful person.
Did he say anything about Japan?
We talked a little bit about it. He likes Asia, relative to, in that regard. And then I switched to the yen because he doesn't like any currencies per se. But Brian will like this because he talks about how a lot of people just don't understand China's economy. They pretend to understand. He said they don't understand it. So he went off and explained what he meant. So I hope, I don't know whether Richard's on or not. I hope he gets it out.
Yeah, he said he's going to try to get it out today.
Huh?
He said he was going to try to get it out today. He's
good.
not in right now, but he said he was going to try to get it out by the end of the day.
Yeah. It's, so yes, there's really nothing for them to do with that money, but you know what, that reflects how undervalued the Nikkei is on a relative basis, because there's, a lot of, that's why the hedge funds and private equity guys would like to get in there, because that's just a pool of capital that they feel they can do, well, I know what that means, so I'm not wild about them, but they could really bid asset prices up because of the huge pools of cash. But that's what makes, that's why I think people, they look at the yen risk on, risk off. I think that's antiquated, even though, on certain days it certainly flows through. But a lot of this is just, it's just Japan corporate with money to play with, all over the place. So we'll see. We'll see. I think you're onto something here. I'm watching it closely.
And you know what? Let me ask you something. Let me just take it from a different angle for a minute.
Yeah.
Who do you believe is the richer country, Japan or Germany?
The richer Japan or Japan?
Okay, and Japan doesn't have any kind of European Union baggage attached to it either.
Exactly, and yet the euro yen. Right now we're sitting at some really interesting levels. That's why I keep watching the euro yen, because it doesn't have that.
So it like what you're saying. So if we get a breakout in the global economy, I want to own Japan.
You know what? I'm not disagreeing with you. I think that there's a lot said. And here, see, last night, okay, if you put up the Nikkei dollar that trades on Globex.
Yeah.
Okay. You see last night?
Hold on a second. Let me throw it in there.
Okay.
I want to throw it in a different cell, so I can get the shorter time frame stuff on there.
And just one more thing while Judd does that.
Okay, there it is.
Who has the greater, because I don't know, do you have any idea who's got the greater dollar value of exports to China? Is it Germany or is it Japan?
They're 2-3, and I'm not sure whether Japan, but Japan has a lot more manufacturers in China, so that you have to factor in too. So I think Japan is 2 and Germany 3, but I could be wrong.
Okay, all right. So they're pretty much neck and neck.
Yeah. Oh yeah.
You almost have to discard Germany, Angelo, and use European Union, because Germany can be ordering some stuff from China, for example, but it may go to France, Poland, Czech Republic, depends. It may come as a raw product, then it turns to the sub component and eventually ends up in Germany. So I would look
Gotcha.
probably as a Europe, EU
Okay,
altogether.
that makes sense.
It's just so intertwined now that I can't tell apart myself.
Okay. Yeah, it's also a good point. I mean, there's so much, it's the whole thing with supply chains and everything. But, and that's why, Angela, for years I've written about in the blog, and for 25 years, I've had what I call the Mercedes Lexus spread. That's what I call it. Because when the yen gets too strong, Mercedes, especially, it's not as much now, but the German auto manufacturers did really well. When the yen was weak, the German auto manufacturers were screaming because they both, especially once Japan in 1991 started with Lexus and was no longer just producing for the mid price market, but was going after the luxury market. And that Deutschmark yen cross at that time became very significant, very significant. And you could go price autos. I would go shop for autos depending upon where the cross was at, knowing that when the yen was weak, I could make a better deal for a Japanese car.
I like that. If you want a Japanese car.
Yeah, well, but Lexus is a high quality. Believe me, when Lexus came out, the mid to late 90s, they were eating into Mercedes pretty good.
Oh, for sure.
Oh, Ira, you're right. I lived in Germany back then in '98, and they were scared stiff of the competition.
Yeah.
To the point they were almost, it was reminiscent of Ford making you park your car about a quarter of a mile, the furthest point of the parking lot in '90s, if you were driving competition, including Japanese. And Germans did the same thing at Ford Werke. And even Mercedes did. They were just scared of Lexus like hell. They took them apart, did the reverse build analysis, cost analysis. How could they afford to sell it so inexpensively compared to them? Yada, yada, yada.
Yeah, you know what? I know. And people used to laugh when, but that's what I called it, the Mercedes Lexus, because that had a lot to do with it. And when they competed in China, which they did, for a toehold in the luxury car market, because the United States never grabbed the car market in China to the extent that the Germans and the Japanese did. So that was really, really significant. And everybody was sensitive to it. Now, I'm not sure that, I think the numbers have shifted somewhat, but the Japanese did what they wanted to do, and they made huge inroads. And that currency was an important barometer, very important. But Angela, those are really good questions. But if you look at Japan and Germany in the post-war world, post-World War II world, they both mastered becoming high quality engineers. So they would take a lower end product and turn it into a better quality product at a higher cost value, which was really interesting because Judd and I are old enough. Believe me, when I was growing up, made in Japan was synonymous of being made in China about 15 years ago. Low quality. I used to laugh because when you thought about my first transistor radio was a Hitachi. I was ecstatic, but that's when they started going, and then to cameras. So they were.
Yeah, that was a very interesting transition where they went from junk to, oh, made in Japan. Yeah, I'll buy that electronic device. I'll buy that China plate. China, not China the country, but China dinnerware.
Yeah.
They started making high quality flatware and stuff too.
Oh yeah.
All of it.
Oh yeah. Yeah. Listen, when they got into electronics, I'll never forget. It was probably 1981. I had bought
Sony.
NEC rear projection television, a big screen,
Yeah, that was a big thing then.
a big thing. So I had it and it wasn't working right. So I called, my doorbell rings. There's 3 Japanese in white jackets who came to look at the TV as to wonder, and they fixed it. It was unbelievable. It was 1981.
My
And
father
then-
had a Sony reel-to-reel.
Oh yeah, yeah. They were,
Well, yeah, everybody did in the 70s.
so they kept pushing up the quality ladder, and they were very successful at it. The Chinese model is built on emulating what the Japanese did, as you can see, because they're trying to move up, and it'll really get interesting because that's where we're going to make inroads. But when the yen was really strong in 2012, and you can look at that chart, we were still down at, I'll never forget, because I put out a blog. It was October 12th. There was a G7 meeting, and the language in the communique, I could see the G7 had given a wink and a nod because Abe had just come back on the scene, and the Japanese yen depreciated because it was just too strong. And they were using the language, if you follow the language before from 2010, 11, that they were hollowing out Japan's industry because the factories were moving to South Korea, China, and it was a real issue. And then the yen drops from like 75 to 120. So, I mean, these things do play out, and they do use the currency. Whether everybody likes to pretend that they don't, but of course everybody does. But the Japanese, I think that your point is really well taken, and I think Japan corporates are probably better suited now than a lot of the rest of the world because they're not buying their stock. What is happening though is that the BOJ, don't forget they didn't only do QE, they did QQE, quality and quantity, quantitative easing, qualitative and quantitative easing. So they're busy buying REITs and other types of equities in Japan. They don't buy international equities; they just buy Japanese equities. So it'll bear watching, but that ceiling, that's really good work because that's there. I've run into it a few times myself and more than bumped my head.
Yeah. So it's at an important spot, and we'll see what happens.
It is important, and it's an important discussion to have because it may well be the canary in the global growth story.
That's what I think.
Yeah.
And even if Japanese corporates don't need all of that cash to for R&D and capex, all right? Because I mean, look, if growth picks up, they're going to have even more profits. So the potential there is for a pretty good increase in dividends too, I think.
Yeah. Oh yeah. And there's a lot of pressure on those dividends to distribute that money. Because Japanese corporations say for years just held money. Governance, there's not much governance in Japan. And it's always been a sticking point for international investors. Because, you like to have some say. And a lot of these corporations still have, it's like having a Ford on the board. But they're more than on the board. They have, so, you have family from Sony, you have, they're still around. Toyota.
Yeah, and they depend on that cash flow.
The Japanese corporations, the auto corporations, Honda, Toyota, I mean, they are truly world-class systems. Now, what will they do in the electronic vehicle? That will be interesting. Which brings us to what Judd posted on Ballard. How much was bought, Judd?
What was that, Ira? Sorry, I missed it.
You sent me a thing about some options in Ballard.
Yeah. Oh, yeah. They were buying the 10, 16, 20s.
10, 16, 20s. How big was the volume? Big?
I don't know. Penn, Cal, how big were those? Cliff, whoever saw that?
Because that's not a high volume traded stock, trust me. So that sticks out like a sore thumb. Maybe,
Yeah, here it is. Yeah, they were buying the, I can't remember. Here, they said it's a small guy.
okay. Because I'll tell you, the Chinese own 25% of Ballard. I didn't, when I told you when I bought that, I think it was back in January of 2019. Yeah, I think that's what it was. On January 3rd, I had read that article. It was the big read in the FT, and I had followed Ballard for years, but I didn't know that the Chinese had owned 25% of Ballard. So
Yeah.
that's what had me jump in, because I was reading. how much
Ira,
work-
you just said Chinese. Did you mean Japanese?
No, Chinese.
Oh, Chinese. Okay.
That's what I said. Well, and then when I read about how much work they were doing on hydrogen fuel cells, and that's why they bought 25%, because they wanted the access to the technology. And it's not like it's expensive. It was expensive. I mean, it's been up and down. If you look at a 20 or 25-year chart, it has moments.
Yeah, and you can see this $20 level on the weekly.
Oh, yeah,
that it's
like a
trying to
rock.
Get up here.
Yeah, yeah. Good ceiling. Well, you even got Fluor up $1 today. They must really be talking infrastructure.
Oh God, talk about a dog.
Oh God, that dog. Thank God I know how to trade, because that would have been disastrous.
My God, back in the '80s, Ira, my godfather used to talk about Fluor.
Yeah,
Yeah.
and look at Jacobs Engineering and ABB. I mean, those are still the ones to look at, and are still
Fluor-
doing well.
Fluor got a lot of love, Angelo, because you couldn't buy Bechtel. Bechtel was the premier engineering group for large infrastructure projects, but that was probably, it's probably still held. And they were all Reagan's. Those were Reagan's people. California engineering firm, big.
Let's see. So I used to get Mark Faber's Boom Doom Gloom report years ago.
Yeah.
Except back then, I didn't understand anything. I didn't know anything.
Yeah.
You know, I should probably reconsider going back and seeing what he's got to say these days.
You know, everybody loves to piss on him. I used to get furious at CNBC because when Mark was going down, they loved to bring him out. So they, again, they play that Wall Street game. I always have a bear at the ready. I always have a bull at the ready, depending what the market's doing. It's the greatest bait and switch game, and CNBC does it. And they would beat up on him. Oh, the market, they would. And sometimes they would just bring him out to try to embarrass him. And eventually, you could see how frustrated he would get. But I was watching once when he had to remind him how bullish he got when the S&P was at 666 in March of 2009. He said, and he was on. I remember what I said, whoa, you better sit up and listen when Mark Faber was this bullish. Because he thought there was real values to be had and that they were, creating liquidity.
Yeah, and Nenner actually called the bottom then too, with the number he had.
Yeah.
I mean, he's
666
definitely a guy.
Was one of Howard's numbers.
Yeah. Oh, yeah, it was. Absolutely.
Howard's number.
Yeah.
Before I didn't even listen to those guys. Howard had it we had that on Howard sheets forever.
Yeah. No, absolutely.
I mean, Mark Faber, he definitely understands how the global economy works. He's probably one of the few people that really understands the nitty gritty of gold.
Oh, yeah.
Commodities.
Yep. and the corporations that are involved in them and commodity. Yeah. So you'll love this. This was an hour, and actually it was really good for me because after him and I finished, he told Richard to give me his email so that we can go back and forth because
Nice.
he was impressed at my depth of knowledge about certain things. He said, "I can't believe I'm having this discussion with an American." So you'll see it. No, that's what he said, and I knew what I knew what he meant because it was about something that I've read in economic history, and he said, "Wow, yeah, it's pretty good." And I didn't know that he was knowledgeable, but he took right off with it, so that was really a good
Oh,
discussion.
he is. He definitely is. You know,
Oh yeah,
I think he's got a few years on you, so you know
yeah.
that's why
He's a little bit
he's
older,
got a little extra knowledge in his brain.
and he's got a PhD in economics. I didn't know that, but
Yeah, he does. I wonder if he still wears a ponytail.
He worked for Whitewell. He says, "You remember why?" I said, "Yeah." And then he went to work for Drexel before he uprooted himself. So he's,
Oh, that's way back.
yeah,
Does he still live in Thailand? Did he mention?
yes, he's still in Thailand.
Oh,
Yep.
he's kinky.
Yeah, you got to go load. You can't help yourself. You go right for the low judge.
Oh yeah,
Yeah.
you know where
But
my
he's
mind goes.
but he's Swiss, right?
He is Swiss. Yeah.
Yeah.
Yeah. Yep. Yep. And proud of it. But he said it was interesting. You'll like it because he said I wouldn't buy a Swiss bond. He says I have to pay 110 for a bond that's going to expire in 10 years at par. You know what? And so
He gets the joke.
we went down that avenue, him and I, because, and I didn't have to bring up, I said, there were some people who were very comfortable and would remind me, Mark, no, I always call him Dr. Faber today. And I said that, the bonds have rallied 25%, been a great investment this year. And we agreed. Without COVID, we're having a whole different discussion. And if you could have told me COVID was coming in December when you put out that buy recommendation, well, we got a whole lot of other things to talk about.
All right. Well, that was pretty interesting, guys.
There's a lot that coordinates here, and I think Angelo, you are really on target with watching the Nikkei here for a lot of reasons.
Yeah.
You know,
It's a big animal.
Japan doesn't need stimulus the way we need stimulus. See, the problem is, since Japan's a rich country, they didn't go into the COVID crisis all laden with debt like
Right.
the U.S. did. Okay.
Exactly.
So the two countries are in completely different places.
Well, they have a lot of public sector debt because they wasted shitloads of money on on infrastructure projects, bridges to nowhere, and many things. We can go from there.
But they could afford it.
Well, they could afford it because that's why I push back when people start comparing the U.S. to Japan with where we're at with the zero interest. I go, no. Japan went into its massive recession in 1989, 1990 with huge amounts of public and private savings. They could bid up these properties because they were sitting on so much friggin' money that, it eventually disappears when you do stupid investments like buying, Pebble Beach for ungodly sums. It eventually will go, and I always remember getting nervous when they were parading around that the value of the real estate at the Emperor's Palace and in central part of Tokyo was greater than all of California. They would be a spot.
Yeah,
crap.
that 5 acres or whatever the heck that plot is.
You know what? I've jogged around there many times. It's really, and there's a beautiful park. Tokyo's a beautiful. It's all cement, but there's a beauty to it. It's unbelievable. I like Tokyo very much. No, but this is a very good discussion to have, because if this all takes off again and it's synchronized, we want to be on top of it, right?
Oh,
Yeah.
for sure. But I
There's a lot
don't,
of
the synchronization though, I'm not, I don't think it's next week. All right. But it certainly could be, first half of next year.
Yeah. Oh,
It's just that between here and there, we're probably going to undergo a boatload of volatility.
Well, it's the next few weeks, and then you got to see what it
Yeah.
does.
yeah. And is it going to be, they've always talked about the 21st century being the century of Asia. Well, we're going to take a good look at first of all, because of,
Actually, Ira,
Well,
did
that's a
he
really
have,
good point.
did Faber have any thoughts on India?
no, we didn't talk about India a little bit, not much at all. But if this, I don't, I can't really listen to myself as I do. So I want Richard to get the tape out, because then or the podcast out, because then when I listen to it, I'll know. Like I'll say, I'll send something to you, Jen. I'll go, this one's really good.
Right.
I'll know. And if it's really good, then maybe we'll come back and do another one. Because I think this is only the second one I've done with him.
Well, the first one was great.
It was good, yeah. But I think we reached a new comfort level here, so I was happy about that, because again, my respect for him is great. Always has been. I mean, I used to read when I was a neophyte and an idiot. I used to read the Doom Gloom report, and he wrote it for people to understand it, because that's who his clientele was. He was handling some sophisticated people at Drexel, but Drexel had a lot of people kind of like that sit in this room, believe it or not. People with, some wealth who wanted to learn and be part of, a more aggressive investment strategy. So, but you have to teach. So he was almost teaching them, as he goes along, as to how this all works.
It seems like, tell me what you think, Ira. It seems like the people that really know what they're doing, and I'm not talking about Stan Druckenmiller, because, CNBC reveres him, so they'll just let him say whatever he needs to say. But somebody like you, Mark Faber, and others, I guess maybe they get to a point where they're like, I'm wasting my time.
Yeah, because they're not really listening to you. Not for me, because I would be on with Santelli, and they weren't going to make me into one of their fall people. They just didn't hear a word that we said. And yet, if I went and reviewed that library of work, we were ahead of a lot of people on things that we discussed. But it didn't matter. I always go back to the Swiss intervention. I was on twice. I was on December of 2014, and a week before, on 2015, warning that something big was going to happen in Switzerland, because they couldn't lift the peg off the floor. And then when it happened, I have to listen to Sarah Isaac. Well, nobody saw this, as everybody was getting beat up. I go, I saw this. Santelli and I spent 3.5 minutes talking about it. I can go back and pull it up.
They don't want to listen to anything. They
No,
only
they don't.
themselves.
No, exactly right. Exactly right. And people don't understand it's the producers who run it all.
Yeah, well, Kernan ought to get a different producer.
It's his wife.
I know that, but I mean, it's pathetic.
Yeah.
Say something.
Or it used to be his wife. I don't know if she's still, it's been a long time. I don't know if she's still working, but I would imagine so.
Say anything sentient. It's the only thing they're not going to lie about is the ticker.
Yeah.
So I watch the ticker with the sound off, and then I turn it off.
Yeah. No, I don't even have you hear. I don't even have it on. I don't even mute it anymore.
No, I don't have it on. I don't have anything on. So
every once in a while, I'll put on Bloomberg Radio if I really waiting for something. But Bloomberg Radio on Sirius is like a 2-minute delay. So It's not even good with the data releases.
Yeah. You know, Richard Russell used to say, you're probably better off being in a room with no windows,
Yeah.
except just all your charts.
Yeah, well, that's true.
Well, then you're only trading price and you see what's real.
Yeah, and you're not affected by the jibber jabber, you know, and there's so much jibber jabber there. But if I know that something big is, you know, then I have to turn it on, like on unemployment. Of course, then I have to listen to, you know, 6 minutes of nonsense. Thank God they stopped bringing out, I'm sorry if I offend anybody, Diane Swank. Not a fan. Not a fan.
Oh, yeah, that was some useless information.
You know what? And when she was at First Chicago, and I told her that, I mean, she's not happy when she wanted to throw a drink in my face in 2007 or 8.
Well, she wasn't much better at Mesereau.
Well, I see at Mesereau, and that's what I said to her. I said, you know, when you were on the sell side doing analysis at First Chicago, your work was a lot much better than when you've been on the buy side at Mesereau. She really, oh man, I'm telling you, that one will never be recovered from. But I don't care. You know what? She wanted to discuss it further. She just didn't like that I said it, and I said it to her because she was speaking at a CME roundtable when I was living in New York. So Scott Baruso called. He says, "Why don't you come over?" And I listened to it, and she was dead wrong. This was going into we were already in the crisis when I was there, and she was downplaying it. And I go, "How wrong can you be about this?" And I didn't say it publicly. I said it to her while I was having a drink. You know, she was standing there. Oh,
well, you know, they all repeat Goebbels' line. Just keep repeating the line and tell us the truth.
yeah. One day I'll tell you.
You know, that someone whose work I thought that maybe you know him or know of him that I think was decent, and I used to look at it was Paul. I'm not saying this right. Paul Casriel, the chief economist from Northern Trust.
I love Paul Casriel. Yeah.
All right. So yeah, I thought his work was pretty honest.
It was
and unbiased.
Him and I used to talk quite a bit because actually one of my favorite working economists was David Hale from Zurich. Remember David Hale? David Hale was really good. So David Hale, back in the early aughts, put together a group that would meet once a month at a nice restaurant. He would arrange it. And we would, I got to go answer the door, but I'll come back and tell you the story. This is, hold on.